Hello everyone. Thank you everyone. Those who have liked our videos and subscribed our YouTube channel Shanky Daddy. In my last lecture, I have discussed about the first method of partners capital accounting. But in this video, I promised you that I will discuss about the next method, that is fixed capital method. Now, fixed capital method itself gives you an idea about what this method will talk about. In this particular method, the partners have a tendency not to disturb their actual capital accounts. They would rather believe to maintain a different account for the business transaction, that is partners current account. Now, बहुत सिंपल सी बात, पार्टनर्स चाहते हैं कि उनके कैपिटल के साथ कोई भी चेंजेस ना किया जाए, इट शुड रिमेन फिक्स्ड, बट द बिजनेस डिमांड्स फॉर एन अनदर अकाउंट फ्रॉम द पार्टनर्स because it is very important that business has to pass the necessary transactions in the accounts of the partner. Capital would remain fixed. Rest, all the other transactions will be passed in the partner's current account. Now, we all know that capital account always has a credit balance. Always has a credit balance. While if I talk about partners current account, the partners needs to maintain both the accounts, partners capital account and partners current account. Partners current account will have debit balance as well as credit opening balance. If the partners are having opening credit balance of current account, it means they are in benefit. उनका अकाउंट प्लस में है. But if the same account is in debit, if the opening balance of partners current account is on the debit side, it means the partners are already suffering losses. Now it is very easy to determine that A might have debit balance, B might have credit balance. There can be any probability. Both the partners can have credit balance, both the partners can even have debit balance. Now, all the other transactions of the business, whether you talk about interest on capital, salary, bonus, commission, remuneration, in the last method, we only maintained one single account, that was partners capital account. All the transactions were passed in partners capital account itself in the fluctuating capital account method, which was discussed in my last video. In this method, all the transactions are actually getting passed in partners current account. You might see that interest on capital, salary, bonus, commission, remuneration, all the transactions were actually passed in partners capital, but over here it is passed in the partners current account, as well as the losses for the partner, the debit of the partner in the partner's capital account, drawings, interest on drawings, each and everything is passed in the current account over here. Now, let us go one by one. The first thing, interest on capital. Now, interest on capital, we all know that is a benefit for the partners. But as the partners have decided that they will maintain their capital fixed, so they can't pass the transaction over here. This will remain the way it is. It is passed on the current account credit side because it is a benefit for the partners by interest on capital, both A and B. Now, the most important thing, interest on credit balance of current account. Please notice this, interest on credit balance of current account. If the partners are having credit balance of current account, it means they are the beneficiaries. वो already plus में हैं, वो already plus में हैं. अगर वो plus में हैं और उनका बैलेंस क्रेडिट में है, तो बिजनेस उनको इंटरेस्ट पे करेगा उनके ओपनिंग बैलेंस पे. इफ आई से If I say, let's take an example. If I say B has an opening balance of 1 lakh. B has an opening balance of 1 lakh. On this 1 lakh of current account credit balance, business will pay interest to B. It means B is getting benefit on what? On the credit balance. That is, if I take an example of 10%, then that would be interest on credit balance of current account for B. It would be 10,000. This is a new transaction because in fluctuating capital account method, we were not discussing about current account, but over here we will also discuss about interest of current account. Further, salary, we all know that it is a benefit for the partners as it was credited in the partner's capital as per fluctuating capital method. In this, we are crediting it on the current account credit side. In the same manner, bonus on the credit side as it is a benefit for the partners. At the same time, commission. At the same time, remuneration. These all, salary, bonus, commission and remuneration, are benefits for the partner and it is credited in the current account credit side. Now, let us shift to the debit side first. Two drawings account. Now, two drawings account, it means what? That the partner is actually withdrawing capital from the business, or whether I should say the partners are actually asking for money from the business for their personal use. Now that particular transaction will not be passed in the partner's capital account. If the money is withdrawn, it will be debited on the current account debit side. Current account debit side, two drawings. It is fixed capital method. Students, please take a note of it. Don't get confused. If in the exams you will not be informed that whether you have to follow fixed capital method or fluctuating capital method, but it is very easy to differentiate between both the methods. अगर आपको एग्जाम्स में कैपिटल एंड करंट दोनों का बैलेंस दिया, if you have been given with both the balances, it is very evident that you have to follow fixed capital method. But if only capital account balances are given of both the partners, then you only have to prepare partner's capital as per fluctuating capital method. At the same time, interest on drawings. Now, interest on drawings, we all know that it is an expense for the partners. It is debited on the current account debit side. Now, as we discussed about interest on credit balance of current account, now we will discuss about interest on debit balance of current account. Let us take one more example. If I say A had an opening balance of 50,000. Now he is actually in loss already. उसका account already minus में है. Debit means minus में है. Credit means plus में है. He is already in minus. Now he would not demand interest on his debit balance of current account. But instead of that, A तो business तो अपने 50,000 पे interest pay out करना पड़ेगा. He will pay 10% as we have discussed, 10% on his debit balance, and that is an expense for him. That is 5,000 rupees. This is a transaction which you actually need to look up to. This is a new transaction. Now, to P&L appro by P&L appro. Now, P&L appro is actually an account which is prepared after profit and loss. And this account is a special account which is prepared with the viewpoint of the business, which I will discuss in my next video. But I will just give you an idea that P&L appro is an account which is prepared to find out that what is the profit received by the partners or what are the losses which are received by the partner. If it's a loss, then that is divisible loss. And if it's your profit, that would be divisible profit on the current account credit side. You will balance the entire transaction and then you will have the closing credit balance. If the credit balance exceeds by debit balance, then you need to write the difference amount over here. As we all know that in ledger posting you have been doing balancing of ledgers. At the same time, if the debit side exceeds the credit side, then the balance will be written on the credit side, closing debit balance of current account. Student, please take a note of it. If I take an example, A is having closing debit balance, it means A is already suffering losses. A अभी business में minus में, and if A is having debit balance, it will be transferred to the asset side of the balance sheet. Take a note of it. Debit side will be posted to the balance sheet asset side, while if B is having a credit balance, closing credit balance, then that balance will be transferred to the balance sheet on the liability side. First thing. Now, partner stand account must be there in your mind, but still partner's capital will be maintained even in this method. So, in this particular method, partner's capital will not play a major role, but still, what could be the probable transactions which can be passed? Now, if I take an example in numerical figures, let's make it more easy for you. If the opening capital of A and B is 5 lakh, 1 lakh. Now, 5 lakh and 1 lakh is the opening balance of A and B. This is the capital already they have in the business. Now, if the partners add any additional capital towards the business, it can't be recorded in the current account, because capital will always be considered as additional capital. You can't include the additional capital in current account. This mistake is a general mistake which is done by every student. Additional capital will not be passed over here. Interest on capital is an income, so we have recorded in the current account. But additional capital will be introduced in the partner's capital account itself. Whether it's fixed, whether it's fluctuating, additional capital is always added to the partner's capital account. If I take an example, 20,000, 10,000. So, right now, A is having 5,20,000 in the business, while B is having 1,10,000 invested into the business. Now, come on the debit side. To cash, bank, asset. And just see my word, withdrawal of capital. Now, it is very important to classify that drawings has a different meaning, withdrawal of capital has a different meaning. If the partners is willing to withdraw the amount of capital from the business, then it would be recorded on the debit side. But this concept of withdrawal of capital is not in use for you right now. This topic or this withdrawal of capital is generally done when any partner takes retirement from the business. So, retirement of the partner is a latter topic. So, this transaction will not be in use for the first 5 chapters. Why? 5 lakh, 5 lakh 20, 1 lakh, 1 lakh 10. So, the closing balance, if I don't consider this, if I don't consider withdrawal of capital, that no partner has taken retirement from the business. So, over here, no transaction will be recorded. If A retires from the business, then he would take all his amount and no balance will be shown. But if the partners are still working in the business, then the closing balance would be very easy. 5 lakh plus 20, that is 5 lakh 20, 1 lakh plus 10, that is 1 lakh 10. This is the closing balance of partner's capital account. Students, as in the last video, I have discussed about fluctuating, and in this video I have discussed about fixed capital method. You need to maintain the formats. the most important thing in accounting and all the chapters will be one thing, that is partners capital and current if it's fixed, and partners capital if it's fluctuating. Please go through the format, please understand the format, and if there are any doubts, you can comment me on my YouTube channel. I will see to it and I will give you the solutions in my next video. Please like, share and subscribe our YouTube channel Shanti Dadia. Thank you.